Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Tuesday, April 7th, 2020, and for this analysis we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. What we're looking at here is a one-day chart where each candlestick represents 1 minute of trading in the S&P 500. And as you can see here, quite a bit of volatility today, and we finished right at the lows of the session. We finished down 0.16% on the S&P 500 today, and we closed at 2659.41. The highs of the day were 2756.89. And so from the highs of the day until where we closed, that was actually 3.54%. So we closed over 3.5% below our high for the day. Okay. Now, when we pull back and take a look at what we've actually accomplished here during this bear market, and what we're looking at here is a year-to-date chart of the S&P 500. Each candlestick is 1 day of trading. And what I've done is I've laid out the Fibonacci retracement lines going from the highs of the day on February 19th, where we actually, that was our all-time closing high, but I just used the top of the candle there, the wick of the candle, and then the lower section of the candle there, the tail of the candle on March 23rd, which is where we've hit our bottom so far, okay? Look, none of us know whether that's going to be the ultimate bottom or not, all right? But what a couple of things here I want to share with you is, first off, we need to keep in perspective, yes, yesterday's rally was a monster rally, okay? But we need to keep in perspective, guys, that all we've done so far is we've retraced a little over 38.2% of this whole move, okay? So this entire drop from February 19th to March 23rd, and what we're looking at here is traditional Fibonacci retracements of a prior move. So in this case, the prior move is the downturn, and now we're looking at how much we've gone back up, what portion of this move have we retraced so far, and where we finished today was just a hair over that 38.2% retracement of this prior move, all right? So we need to keep it in perspective. Yes, it's great. Yes, we're off the lows so far, but we've seen these types of things before, and I'm going to show you that here in just a second. Keep in mind that this is still a very high-risk environment that we're in, and so we just need to proceed with caution. Now, let's go back and look at something like this in the past. And what we're looking at here is the 2000 through 03 bear market. So this chart goes from 1999 through the end of 2004, okay? And this is now a weekly chart, so each candlestick represents 1 week of trading in the S&P 500. Some of you may remember this chart. I used it a few days ago, and I just left the blue annotations in there. But what I want to do is I want to take this to the next level, and I want you guys to watch me do this, okay? So what we're going to do is we're going to go out and we're going to do Fibonacci retracements on this move here, because we had about the same level, 29-30% drop, right? And then we had this pop. So let's take a look, and let's just lay these Fibonacci retracement numbers here over these blue lines so we can kind of line it up. And I think what we're going to see here is this rally, right, that we just had here is not too dissimilar from this rally, as hopefully you guys can see this all right, in that we had about a 45, 50, we challenged that 50% retracement there, okay? Again, we had the drop. We were down 29% at this line, and then we had this pop. We tried to get up. We got up above that 38.2% retracement level. We tried to overtake the 50% retracement level, and it failed, and then the market rolled over again, okay? So do I know for sure that that's going to happen now? Of course not. But just understand that just because we've had this nice movement here, we're still not out of the woods here yet, okay? And this is still a very, very high-risk environment, all right? Now, Simple Market Signals is a way I can help you, and I want to show you what this would have looked like using Simple Market Signals, because keep in mind, my model is a risk-based model. It helps identify levels of market risk in the stock market. And the model finally came together for me in 2017. I worked on it for over 20 years because I was just obsessed with trying to figure out a way to determine, a consistent way to determine market risk. And once I figured it out, it has helped me out enormously. And then I went and back tested it during the last couple of bear markets. And here's one example. So this is 2003, and this is just a quick example, guys. And then I'll tee up some more information for those of you that are interested in finding out more about simple market signals. But the bottom line is the signal, okay, and it's a green, yellow, red signal. I've made it very simple for people to understand. It's very effective. The model behind the signals is complex, but I've simplified the way that I explain it so that everybody can understand it, from somebody that's a veteran in the industry, which is why I have so many financial advisors that subscribe to this. I have multimillionaires, and I have beginning investors. Everybody can use this, okay? But the point I want to get across here is back in 2000, at approximately the 1450 level on the S&P 500, the signal in my model would have turned red, and it would have been red for the majority of this downturn, and then it would have turned green here, okay? So simple market signals can help you in these really volatile times, because you're going to know if the signal is red, you have a very high risk environment that you're working in, okay? And it's really, really hard to make money in these high risk environments. And any rally, okay, that happens in a high risk environment, like when the signal was red here and then we had this rally, these rallies are prone to failure, okay? So this rally here that we're in, guys, we're in a very high risk environment, and that rally, the rally that we're in, is prone to failure. It doesn't mean it will fail, but guys, there's a lot going against us right now, okay? So please be careful. You know, what we're dealing with here is a very high-risk environment. None of us know whether this was the ultimate low or not, but there's a lot stacked against us, and just understand that we've been here before, and just because you have a nice little rally and you're up, you know, 40, 45% off the lows doesn't mean that rally can't fail and you can't go lower and then lower again, okay? So we have to be very, very careful here. And for those of you that are interested in finding out more about simple market signals, I will now tee up some more information. And don't forget to subscribe to this channel for ongoing finance, stock market, and success information. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational And if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing simple market signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing simple market signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, you know, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how simple market signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how simple market signals would have helped you, the video here, S&P 500 2000 through 03 using simple market signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.